Alright, another week, day 2363. There we go. Start with the economic calendar. Apparently, things are already going on right now. Sunday 4 a.m. China. I don't know what that's about, but China released something. Oh, look at that. Gold, Dow Jones. Euro is looking bearish for the majority of traders. Bullish there. Can I change this? Yes, I can. Okay, so it's supported. Not at all. Dow Jones, no Dow Jones either. I don't know who Caddy is. So, anyway, it's whatever. It'll that happen. Traders online. No, let's just check what's next week. It's NFP week. New month. Oh yeah, it's a new month, which means that it's the end of the month, new month tomorrow. So should be doing a monthly review where you have to look back at everything you've done during August, and it's wild. Like, I was going through my journal earlier, and some pretty it's noticing what if I addressed things that I shouldn't have addressed or not. But the month started with like on a positive note. Let's say July ended on a positive note, so I started August good, and then it uh, kind of fell off. Not really fell off, but progress slowed. Let me put it that way. Versus what I was expecting for the month, which is not the worst thing in the world because I think I found what the two major issues I'm having with my trading is, which is entries and management. So they kind of affect each other, not really. So entries affect management in the sense that if you take a shit entry, you're probably going to expend more mental capital trying to manage the position into profits versus, or just accepting a small loss and then having to wait later, versus if you take a good entry and you know nine times a good number of times the entries that I do find when I take them on time, which is I'll get into that. So it's like, yeah, entries affect the management. If you have shit entries, that means you're probably gonna have stressful management. If you have good entries, your management's probably gonna be minimal, if at all required. Like, apart from setting a stop loss and take profit, there's very little, if anything, that you should be doing for a trade that has been planned properly and is executed according to market conditions. So for me, it was FOMO. Like, FOMO for a lot of things, bro. Just FOMO for a lot of things that are outside of trading, which I'm trying to use trading to solve. So that leads to like subpar entries, most of the time being too early, getting stopped out, and then price going in my direction, in the direction of my bias or the predict anticipated direction, or what happens is I take a good entry, and most of it was like FOMO of price going without me. That's one of the main ones, and then yeah, just taking entries at predefined areas. Most it's due to seeing volatility in like the 5 minute, 1 minute charts, which are like, okay, we're going now, and then sometimes it's usually early, so then what happens is you get stopped out and the price goes. So that's entries, and then management is defensive trading, where you aggressively trail your stop loss to reduce the chances of you losing money. I found that with good entries, I potentially don't even need a stop loss, right? because the trade's gonna go in my direction. Why the fuck do I need a stop loss? That's management. So fearful management sometimes leads to trading the stop loss too soon, and then getting stopped out, and then price going in your direction. This is not good because it eats into your capital. It eats into your gains. Maybe it doesn't need like what happens is you're in a situation where your account balance is not being depleted, and your gains are not being compounded because instead of getting uh 20, 30 pips, you end up closing with like 5, 7, 10 pips, and then that really impacts the account growth, which kind of leads to more FOMO because you're like, oh my gosh, the week is ending, the session's ending, the day is ending, the month is ending, and I haven't reached my profit goal. So leads to subpar entries, and it's a loop that you have to find a way to break out of. I'll go further into detail on it on Discord. Links in the description below. Like and subscribe if you're learning anything so far. So, FP week, let's go through charts. What's cool is tomorrow is the beginning of a new month, so I can use the current month's price data, price data, to make trading decisions, and it's not going to affect too much going forward. Right now, this is just for aesthetic purposes. Like, this is just not really affecting my analysis. So, we have this monthly buy side here, and we've just created a swing high over here. So we have another level of monthly buy side ahead of September 2025. Would you say this month consolidated? Like, was it within the range of the previous month? No, we went slightly below previous month's low, and then I rallied higher, failing to reach that buy side liquidity and forming a swing high. So what does that look like? You can take this off on the weekly, because typically it is weekly buy side. Like, no, I'm gonna change this. Gotta be visibility on monthly only because it doesn't align with what it is that I want to see for lower time frame. Put it on the daily maybe. It doesn't align with what I want to see from a buy side liquidity formation. So I have that up there just in case. This seems to have held up pretty well. Like, price didn't close above it. Okay, I clicked something. Price didn't close above it. There we opened above, but we came and closed far below. Otherwise, this gap has been traded through several times. Price even closing below it down here. So to me, this is no longer valid. Because this is what we're looking at on the weekly chart too. This is consolidation of 1, 2, 3, 4, 5, 6, 7 weeks, possibly the 8th. We might have a breakout this week because of NFP, or we could not either. I should get those lines off, but at this moment, okay, let me take them off. Push the lines into lower time frame visibility, and then you see that there's more lines. Yes, there are more lines. Pushing them back down to lower time frame visibility. Okay, so what do you have here? Right, before I continue with that, where's my line? That shows me it's been 60 days since we started here. 60 bars on this day. What day is this? 25 July, August 25. So this was 60 days. Yeah. My prediction for the week was it go down and come up. Pretty much that's what happened, but we didn't get to the buy side like I thought. We just ended up somewhere here. But overall, weeks bias I guess was okay, on point, you know. And we have these, which we have to push forward into time now because guess what? June, July, August is 3 months, so then we're starting another contract delivery month for futures, and this affects how Forex is going to trade also, since they're kind of based on futures. Or is it the other way around? It's one of them. So September 1st, this should be September 1st. If we start looking back 60 days, 90 days, 120 days. Ooh. Turns out there's a lower low here. Happens if I say 280. Too good at this one. Oh right, supposed to extend it another 20 days forward. These are the buy side and sell side levels you should pay attention to most. And if you see that, look at that. We're in a range over here. In that range, we have buy side, sell side. This doesn't fit my criteria for sell side liquidity. And why is this marked the sell side liquidity if it doesn't fit my criterion? Because the low here is at 3712, the low here is at 3725. If anything, that isn't even, that doesn't even qualify. I'm just going to delete this because this serves the same purpose. Okay. And balance, yes, I'm not a fan of how it's printed, so I'm just going to use something more familiar in terms of a PD array. Should be a bearish order block, should trade it into there, and then the next order block that we trade it into would be over here, forming over here. As you can see, price went trades into it respect to the midpoint and has since formed the fair value gap, which saw price retrace and close within all above, which leads to me expecting bullish prices still in the upcoming week. Also notice how this um the breaker, I'll get it right eventually before the end of the year. If it has a swing low, first of low, high, and then we haven't formed a high yet, so it's not really a breaker, which would be on this candle, but order block regardless. Being respected over here, here we went a bit lower. Right there, probably find something in the lower time frames, or it's just this inverted gap over here. So if I was to mark up, it would look something like this, you dig? That's where we're at. Maybe retrace into here for a value gap. And then I see running higher. Since it's NFP, I'm gonna bank on this. Sell side liquidity getting, buy side liquidity getting swept, getting taken. Taken means traded through. Swept means, or we could even have price come up to here, take out these levels of liquidity, and then run much lower into this uncontested area of price gap that hasn't been tested. Could happen. Plus, I mean, you're supposed to say we're in the bullish, we're in the bearish side of the price range, so you should be looking for bearish PD rays for price to trade lower, etc., etc. That's what I see happening on gold. Oh, this is not gold, this is euro dollar. That's what I see happening on euro dollar. Fuck yeah, boy. I mean, almost perfect to the fucking T, but fuck yeah, dude. Price went down and then went all the way fucking up. No, I'm not on Marshall, but now you know what's going on in my head. So this is what it looks like. We went above that month's high. As I said, liquidity. I think we keep it on only until the daily charts. Lower time frames, this has already been traded through, so should not affect the way price moves on lower time frames. And also, I'm a bit more lenient with the way buy side liquidity is being marked on the higher time frames versus on the lower time frames. And for me, lower time frames, I'm kind of counting from the weekly. See what happens here. We have a close above this buy side liquidity on the weekly chart, telling me that we are likely to continue trading higher from here on out. Turn this into sell side. Okay, so that's my sell side liquidity down here. So see price getting into there, not really. Very well could have a new all-time high, form a gap, retrace into that before we take off higher to like 4K or something, because there's people who've already put in orders for gold at 4K. Yeah, so I'm expecting next week to be bullish. Where's my daily chart? I didn't do this thing yet, huh? I didn't do this thing yet. So go there. That would be the anchor. And that's 20, 40, and 60. 20 bars. Why am I doing 20 bars? Because each bar is counted as one day, excluding weekends. So August 4, July 7, June 9,974. Extend to here. And look at that. Price makes a gap while trading through this level of buy side liquidity. Very strong bullish momentum indicator. Can take that off. It's just the closest level of sell side of the daily chart. The sell side I deem valid because there's a swing low over here, but that's not sell side yet. A little overzealous, over ambitious with seeing a new all-time high next week, maybe. Going for it though. So then this also becomes a PDRA because we traded through it, and this would be a breaker, not a mitigation block. It would be a mitigation block, not a breaker. Because why? We had swing low, then a swing high, and then a swing low. And then a swing, we had low, a high, and a lower, higher low. Low, high, higher low. And then we broke through. So that makes this a mitigation block because this would be counted as a failure swing. Versus if we had this one high, a lower high, lower low, and then break through, then that would be a breaker block. Told you I'd get it right before the year ends. And I should do it within the session. Okay. And lastly, throw this on just for aesthetic purposes mainly. I mean, it does serve a purpose, but also aesthetics. Okay, 300, 240, about there. So that's your premium and discount PDRA. Not that one. This. Hold it at the. And then send it to the bottom because right now it's overlapping a lot of. Yeah, that's what I see on gold. And finally, JP225. Brother, I'm good at this shit. I'm good at this shit, man. Go look at last week's video, last week's post, and you'll see. So that was wild. We created a new all-time high, but still managed to close below this level of buy-side liquidity. What does that mean? means that the market's showing weakness, and we could expect price to somehow fill in some part of this gap next week, but more than likely form a swing high. Okay, so you've retraced lower into this gap over here. Extend all-time high into October. This is still valid next week, so this is the main decision point for next week. Technically, I should be able to also have this over here because we had a gap through this level. So this is decision point for next week. If we see price close below this fair value gap but not below here, then we can expect bullish continuation. I see we just formed a swing high, so might have a failure swing before I come back down. Or we could just be coming back in here to pick up some more orders before pushing higher. Let's see what the daily says. I'm going to start with pushing this forward because it is a little too far back for my liking. Should be somewhere there. And that's the high of the last 60 days. That makes that the low of the last 60 days. You could see continued retracement into the midpoint somewhere here, which overlaps nicely with this monthly level, and from there you should see bullish price action continue. So right now we're still bearish on this pair. I'm a bit off, I'm not gonna lie, I'm not 100% on it, but yeah, I mean 1, 2, that's pretty fucking good, dog. Predicting the close of the week, you don't need it to be profitable, to be honest. It's pretty fucking cool I can do that after all these years of staring at charts. Yeah, I'm gonna talk about that at some point in a future video. For now, I'm seeing consolidation. Likely see price open, push them down here on Tuesday or Wednesday, push back up. This is the kind of week I'm expecting to see. Maybe up here is a bit too far. One, two, three, four, five. This. It is heavily dependent on how price reacts to this overlap of the weekly levels plus this daily level, because then that determines how far, like which side we're gonna go. If we close below here, then it's good chance we're gonna continue lower. If we bounce over here and come back higher, then we just might either make a new all-time high and then come back lower, or stop somewhere around here, take the stop somewhere around here and then push lower. It's my idea for the upcoming week. Yeah, I'll take screenshots, upload those to Twitter at some point. For now, I should be done with the stream because I've been here for a bit longer. Well, maybe not a bit longer, but yeah, 30 minutes is okay.